Do you dream of owning a historic home in New Orleans, a Creole cottage uptown, a charming double in Mid-City, a classic home in Lakeview? The Big Easy is still one of the most affordable cities in the country for what you get. But there's one number that stops relocating buyers cold, and it's not the purchase price. It's the insurance quote. Today we're breaking down 3 things that will completely change how you budget for a home here. Wind and hail deductibles, replacement cost value, and the Louisiana Fortified Homes program. By the end of this video, you'll know exactly what insurance across the neighborhoods we work in and how to build a complete budget before you ever make an offer. Why insurance feels like a gut punch and why it doesn't have to. Here's what we see happen all the time. Someone moves here from Ohio or Texas or California. They find a beautiful home, they run their numbers, and everything looks great on paper. Then they call an insurance agent and the quote comes back and they go quiet because the number they were expecting and the number on the quote are not the same thing. Part of that is a comparison problem. If you paid $1,800 a year to insure a home in Columbus and your New Orleans quote comes back at $4,500 or $6,000, your first instinct is that something is wrong. But you're not comparing the same thing. You're comparing a policy built for Ohio weather to a policy built for Gulf Coast hurricane exposure. Those are 2 completely different products, and the price reflects that. Now, the annual premium is what most people fixate on. And yes, it's higher here than in most of the country. But honestly, the premium isn't the number that surprises our clients the most. The number that really gets people is the wind and hail deductible. Here's how it works. Most owners' policies in Louisiana carry a separate deductible specifically for wind and hail damage. And unlike the flat deductibles you're probably used to, $1,000, $2,500, maybe $5,000, the wind and hail deductible here is typically calculated as a percentage of your insured value. So if your policy covers $400,000 and your wind and hail deductible is 2%, that's $8,000 out of pocket before your insurance pays a single dollar on a storm claim. On a $500,000 policy at 2%, you're looking at $10,000. That's not a small number, and it's not one your lender is going to spell out for you when they're running affordability numbers. This is why the estimate your lender plugs into a pre-approval and the real quote a local broker pulls are almost never the same. Lenders use placeholder numbers. Local brokers pull actual quotes on actual properties in actual flood zones. Those are 2 very different things, and the gap between them can absolutely change whether a deal makes sense for you. So, what do we do? Before our clients make an offer on any home, we get a real insurance quote. Not an estimate, not a lender placeholder. An actual quote from a local broker who knows these zip codes, knows the carrier's landscape, and knows what a 15-year-old roof in Lakeview is going to cost you versus a post-Katrina rebuild in the same neighborhood. That number goes into the budget before we even write an offer because it's part of the real cost of owning a home. Buyers who skip that step are the ones calling us from the closing table trying to renegotiate because the insurance came in $200 a month higher than they planned. And sometimes we can work with that, but sometimes the deal falls apart entirely. Getting the quote early is the move that keeps everything on track. Now, there's one more reason your coverage amount might look completely different from your purchase price, and it's something almost nobody explains clearly up front. It comes down to how your home is actually valued for insurance. In New Orleans, with our historic housing stock, this gap can be significant. Replacement cost value versus market value. The number that actually runs your policy. So here's the concept. When your insurance company values your home, they're not looking at what you paid for it. They're looking at what the tax assessor has on file. They're not looking at what the tax assessor has on file. They're not even looking at what comparable home down the street sold for last month. They're asking one question. If this house burned to the ground tonight, what would it cost to rebuild it? From the foundation up at today's prices for labor and materials. That number is called replacement cost value, and it runs your entire policy. Now, in a lot of markets, RCV and market value track pretty closely. But in New Orleans, with our historic housing stock, the gap can be wide, and it catches buyers off guard every time. Think about what it actually takes to rebuild a Creole cottage or a classic shotgun house. You're not calling a national home builder and ordering a standard floor plan. You need craftsmen who know how to work with heart pine floors, plaster walls, and period millwork. You need materials that match the original construction. The labor alone costs more, and the materials aren't sitting in a warehouse in bulk. That specialty work is priced into your RCV, and it pushes the rebuild cost well above what the home trades for on the open market. So you can buy a beautiful uptown double for $350,000, and your insurance company's RCV calculation comes back at $480,000. Go figure. That's not a mistake. That's the actual cost to put that home back the way it was. And here's where it gets important. Most insurance companies require you to carry coverage at 100% of your home's replacement cost value. But there's a floor built into the system, and it's called the coinsurance requirement. If your coverage drops below 80% of your RCV, a penalty kicks in, and it applies to every claim, not just a total loss. The CE class we took this year walked through this with a clear example. Start with a home that has a replacement cost value of $500,000. If your policy only covers $300,000, you're sitting at 60% of RSV. That means when you divide what you have by what 80% of RCV would require, you get 75 cents on the dollar. So on a $50,000 storm claim, your insurance pays $37,500 minus your deductible. You're eating the rest. And again, that's on a partial loss, not a catastrophic one. The 80% floor is the minimum, but most carriers are going to push you toward 100% coverage. And honestly, in this market, that's the right call. One more thing on this, because it matters for anyone who bought a home here in the last few years. RCV is not a fixed number. It moves with construction costs have not been friendly. A policy you set in 2022 based on an RCV estimate from that year may be underinsured today. Material prices moved hard after the pandemic. Labor costs followed, and if your carrier hasn't automatically adjusted your coverage limits upward, you may have drifted below that 80% floor without realizing it. That's worth a call to your broker to check. So when you're budgeting for a home here, the RCV is the number that determines your required coverage level, which determines your premium, which determines your real monthly cost. Market value tells you what to offer. Replacement cost value tells you what you're actually on the hook to insure. Now let's talk about what those numbers actually look like across the neighborhoods you're most likely shopping. Real numbers by neighborhood: Uptown, Mid-City, Lakeview, Mandeville, and Covington. Let's get into the actual numbers, because this is where the picture gets specific. Every neighborhood we're going to cover has its own risk profile, and its own carrier story, and its own insurance math. This isn't a ranking of the best to the worst. It's a side-by-side look at what buyers are actually facing when they shop in these areas. Uptown first. This is the historic New Orleans at its finest. Oak-lined streets, double shotguns, raised cottages, homes with genuine architectural character. It's also where the gap between market value and replacement cost value tends to be the widest, for all the reasons we covered. You're buying old, beautiful construction that costs a lot to replicate. Wind exposure is real. Flood zones vary block by block, so two homes on the same street can carry completely different flood insurance requirements. For a well-maintained home in the $350,000 to the $450,000 range, buyers are generally seeing combined homeowners and flood premiums somewhere between $5,000 and $8,000 annually, depending on the specific address, flood zone, roof age, and carrier. That range moves a lot based on those variables. That's exactly why a real quote on a specific address matters more than a general estimate. Mid-City has a different story. The housing stock is mixed, some historic, some mid-century, some renovated. And the flood zone picture is genuinely varied. Some streets in mid-city sit on X zones, which means they're outside the high-risk flood area. X is the best. That changes the flood insurance calculation significantly because in an X zone, flood insurance may not be required by your lender at all, and if you choose to carry it voluntarily, the premiums are considerably lower. Wind and hail still applies everywhere in the metro, so that piece of the premium does not change. But buyers who land in a mid-city block in an X zone are often pleasantly surprised at how the total insurance picture looks compared to their uptown counterparts. Lakeview is interesting because it's largely a post-Katrina rebuild. Many of the homes are 2006, 2008, 2010 construction. Newer roofs, updated systems built to more recent code. Newer construction generally means more carrier options and lower premiums compared to older historic stock. But proximity to Lake Pontchartrain keeps wind exposure elevated, so the wind and hail piece of the premium stays meaningful. The flood zone situation in Lakeview also requires attention. Buyers get a newer home with better insurability on the structure, but they still need to budget seriously for both wind and flood coverage. Total combined premiums for Lakeview homes in the $300,000 to $400,000 range tend to run in similar band to Uptown, though the mix between wind and flood shifts depending on the specific block. Now here's where the North Shore changes the conversation. Mandeville and Covington sit across Lake Pontchartrain, and the insurance landscape looks meaningfully different. Flood risk is lower than in many areas, though it's never zero, and buyers still need to verify their specific address. More importantly, the carrier options expand significantly. When you move further from the coast and into newer housing stock, more companies are willing to write the policy, and competition among carriers is one of the few things that actually keeps premiums in check. The CE class we completed this spring was direct about this. Further from the shore, and particularly in St. Tammany Parish, buyers have more choices. That translates into better pricing and more flexibility for coverage terms. For comparable home values, North Shore buyers are often carrying $1,500 to $2,500 less per year in total insurance costs than their Orleans Parish counterparts. One thing worth naming plainly, Louisiana Citizens is the insurer of last resort in this state. It exists for properties that private carriers won't touch. For most buyers in the neighborhoods we're covering, Citizens shouldn't be your first call or your only option. Working with a local broker like ours that we work with is Lester Coe of TWFC, who maintains relationships with 6 or more agencies, gives you access to the private market first, and that's where the better pricing lives. An online calculator isn't going to tell you which carriers are currently writing in your flood zone or whether your roof age disqualifies you for a preferred rate. A local broker who knows these zip codes will. The Louisiana Fortified Homes Program, your $10,000 advantage. So we've covered what insurance costs and why. Now let's talk about one of the real tools you have to bring that cost down. Most buyers relocating here have never heard of it, and that's a shame because it's generally one of the better programs the state has put together. It's called the Louisiana Fortified Homes Program. And the first thing to understand it actually is, this is a grant, not a loan, not a tax credit you have to wait until April to see. A grant paid directly to your contractor on your behalf up to $10,000. The money goes from the state to the roofer. You don't touch it, you don't repay it, and if you qualify, it covers the full cost of the upgrade in most cases. What does it pay for? A roof upgrade to the IBHS Fortified Standard. IBHS stands for Insurance Institute for Business and Home Safety, and their fortified designation is an engineering standard built specifically to help roofs resist hurricane-force wind events. This isn't a cosmetic upgrade. It changes how your roof is attached to your home, how your decking is sealed, and how resistant the whole assembly is when the storm comes through. Now let's talk eligibility, because this program does have requirements. Your home needs to be an owner-occupied single-family primary residence with a homestead exemption. Condos and mobile homes do not qualify. The home must be in good repair. You need to carry a wind insurance policy, and if your home is in a designated flood zone, you also need to show proof of flood coverage. The work has to be done by an LFHP approved contractor, and a certified IBHS evaluator has to come inspect the home before and after the work is complete. The process works like this. You apply online at ldi.la.gov/fortifyhomes. Once your application is in, you get bids from 3 approved contractors. The evaluator comes out, reviews the home, and submits a report to the IBHS. The contractor does the work, the evaluator confirms it meets the Fortified standard, and once that certificate is issued, the state pays the contractor directly. You cover anything above the $10,000 cap, but for most standard roofs, the grant covers the job. Here's why this matters beyond just the roof itself. Carriers recognize the Fortified designation, and many of them reduce your wind and hail premium when your home holds the certificate. We've seen the wind piece of a premium come down meaningfully with a fortified roof in place. On a policy where wind and hail is already one of the larger line items, that discount is real money every single year. One thing to be straightforward about: grants are awarded first come, first serve, and funding availability isn't guaranteed. This program has seen strong demand, and there have been periods where applications were paused while the state managed the queue. So if you're thinking about this, pursue it early. Don't wait until you've been in the house 2 years and finally get around to it. And if you're actively shopping for a home right now, ask whether the property already has a fortified designation. If it does, that's a premium advantage you inherit from day one. It's worth asking, worth verifying, and honestly worth factoring into how you evaluate 2 otherwise comparable properties. How we actually do this: the pre-offer insurance strategy. So let's put this into practice, because knowing the concepts is one thing and knowing what actually to do before you write an offer is another. Our approach is straightforward. Before a client makes any offer on a home, we get a real insurance quote on the specific address. Not a ballpark, not whatever number the lender typed into the pre-approval worksheet. A real quote from a real broker who pulls actual carrier options for that zip code, that flood zone, and that roof. We typically work with Lester Coe at TWFG for exactly this. He knows the carrier landscape here, he knows what different neighborhoods look like to underwriters, and he can pull a real number fast so we have it before we even write an offer. Why does that matter so much? Because the complete cost of owning a home here is purchase price plus property taxes plus homeowners insurance plus flood insurance. All 4 numbers together. Most buyers are running their affordability math on one of those 4, maybe 2. When the other numbers come in after the offer is signed, the whole picture shifts. Getting the insurance quote before the offer keeps you in control of the math instead of reacting to it at the closing table. There are a few things a good local broker is going to flag that an online calculator simply won't. Roof age is the big one. Some carriers like Sure require a roof that's 5 years old or newer. If the home you're looking at has a 15-year-old roof, your carrier options shrink immediately, and the ones still willing to write the policy are going to price that risk in. That's information worth having before you're under contract, not after. Flood verification is the other one. The difference between AE zone and an X zone on the same street can mean thousands of dollars a year in flood premiums. Your broker should be verifying the specific flood zone for the address, not just the general neighborhood. We've seen 2 blocks apart with completely different flood profiles, and the buyers who knew that up front made smarter offers. The affordability story in New Orleans is still a good one. Compared to what buyers are paying in Austin and Atlanta in South Florida, the purchase prices here remain genuinely competitive for the architecture and the lifestyle you get. But affordability is the complete number, not just the mortgage. When you know all 4 pieces before you make an offer, you can negotiate from a position of clarity. You know exactly what this home costs to own, and you make your decision with full information. Whether you're 9 days from making a move or 90 days out, reach out. We'll walk you through the full picture before you ever write an offer. All of our contact info is in the description below. The wind and hail deductible is the number that changes everything. Not the annual premium, not the purchase price, but what comes out of your pocket first when a storm hits. Build your budget around the complete cost: mortgage, taxes, homeowner's insurance, flood insurance, and your deductible exposure. Before you look at another listing, get a real quote on that specific address from a local broker who knows these zip codes. If you're planning a move to New Orleans, Bernard and I work as a relocation team, and this is exactly the guidance we give every client from day one. All our contact info is in the description, and we'd love to help you make a smooth move to the Big Easy. Hit that subscribe button and tap the notification bell. And check out our next video where we answer a question a lot of buyers don't think to ask until they're already under contract. Can you really keep your boat behind your house in Louisiana?